Hey guys, it is Thursday. No rest for the weary before the holiday. September the 1st, and the markets look a bit like a bloodbath. Give me 1 second. I'm going to share my screen here. But man, what an ugly day in the markets. Past performance is not indicative of future returns. And if I show you this, you can kind of see everything's down quite a bit. And I think what pummeled the market, aside from this being the first day of the new quarter, is this release from NVIDIA, from the US government, as relates to, here, let's see, this right here, which is a requirement for licensing and restrictions associated with the A100 chip, and as relates to sales to China and Russia. Now, obviously, all the powers that be are reporting that they did not actually have any business in Russia at this point, given all the restrictions that we've been under for some time. But they had about 400 million in sales slated for the next year off of a top line of 5 billion. So we aren't talking about nothing. It's like a 6.8% reduction in the top line. Additionally, I think that the market is a little bit concerned because it's unknown what kind of retaliation might be occurring. Additionally, is it just this, or is there going to be additional stuff to come? We do still have China being a part of the semiconductor supply chain, and we do have definite supply constraints. It becomes very strange because in a supply-driven inflationary market, I don't know that this is the best way to tape down demand. I get that they're concerned that what's happening is that the chips are being resold to Russia, thereby whatever it might be that they're thinking is going to happen there. And so that's kind of what's invigorating this. What I have prepared today is I'm going to do my typical market overview, and then I'm going to talk about PayPal because it's been a while since I've looked at it. There were a couple of things I was seeing that made me want to look at it again. And then I decided, okay, this is how I'm thinking about it. So first, on the market, it's red. But strangely enough, it's almost a reversal. You've got healthcare, which has been really weak, rallying a bit. And then you've got a couple of names here and there. I mean, this really looks like a reduction in gross plus massive concern, given that the index that's selling off is really NASDAQ, to the tune of 2 times that of the S&P. So most of the S&P loss is really coming from NASDAQ more than anything. So given that, it's more of a gross fallout, so to speak, and the market kind of feels like that. I mean, in order to get things done, you're not able to come in at the mid. You're really having to try to hit the bid or lift the offer. So that's not the kind of market where we're really excited to come here and do anything other than take opportunities. I continue to like dividend yielding stocks that have no problem paying their dividend and are in positive situations, such as Devon Energy, and also Icon is actually doing a little bit weaker today. I think you want to kind of very calmly leg into these things because with the Labor Day weekend coming, you do have 2 days of just nothing, or you have an extra day of nothing after, so it's not the ideal circumstances to be too aggressive in this marketplace unless you really need to get something done. But have a nibble today, have a nibble tomorrow, and then Monday or Tuesday is really where we want to take a look. Okay, so with that, NVIDIA really was like nothing else really matters. ISM numbers came in a little better, but that's not really the thing. I want to talk about PayPal. And the thing I want to talk about PayPal is that there's articles from Barron's that are suggesting that the analysts are rallying around this. And I think this might have to do with the activist investor, Elliott Management, that is in this name. And they've been really supporting the stock. And I got to say, it really made me think twice about how I'm thinking about PayPal, because as you guys know, I've been short this thing since like the 200 level or something like that, above 200. And so I really wanted to review it and see if I was missing something, because when I listened to earnings, I wasn't as impressed as everybody else. Now, this is part of the reason why I listen on my own and make a call. And then I look at what the street is doing and saying before I decide what I'm going to do next. And the street is reporting it as doing better than expected or beating analysts' lowered expectations. But I really want to show you what's going on here. Okay, here is the total revenue. It grew. Here's the column that we're interested in. It grew 9%. As you can see, sequential decline every single quarter. And they've blamed that on a number of things. At first, they were blaming it on eBay. Well, guess what? That's like 2% of your revenue now. You can't blame it on eBay. And now they're just saying some of it's FX. Now I'm not seeing it because that's only a 1%. But, you know, they've blamed it on literally everything. And what really bothers me and has always bothered me is that you do have margin compression on transaction volume, which I'll get to next. But even worse than that, I'm not like, just for the record, the transaction growth for Visa MasterCard is closer to 20 something percent. Okay. So this is not glorious revenue growth, so to speak. And I'm gonna show you some of the other things associated with that that really, really bother me. But when they started to talk about Elliott Management, which is activist, which typically means that they're not really stoked about what management is doing. They came on the call and said, no, we're in line. We want to do the same things they do. We want to reduce costs, right? Okay, it's wonderful for you to tell me you want to reduce costs, but I really kind of want to see it in the quarter. Here's what I saw. Now, the way they split out their expenses is not my favorite thing. Okay, this is one of the ways that they give it to you. Here's volume-based expenses, which I presume, if I understood from the call and what have you, it's possible I did not, because there are people that are deeper in this name than I am by a lot. But you know, this seems like it should go with revenue or transaction volume, either one. And when I do that math, when I divide 2693 by either that and then 3492 by either of those numbers, I don't get better margins on higher volume. And that's always been my problem with this thing. I never get better revenue on or better operating income or lower operating expenses off of higher volume. And I, again, did not get it this quarter. Now, this other non-transaction related expenses, I'm assuming that given this way that they broke it out, so they break it out the classic way, not very helpful because there's no division. And then they break it out this way, also not very helpful. But I'm assuming non-transaction related expenses is everything else in SG&A, et cetera. They do have a bunch of layoffs that they're doing. I'm not thrilled about the nature of the layoffs, quite frankly, because their business isn't one where there's a lot of physical labor, okay? And they do have a number of acquisitions that have to be reintegrated, and systems to upgrade and, right? So this isn't something that makes me thrilled that non-transaction related expenses, which was up on the quarter, when it comes down due to staffing changes, is really something that should, could, or would, like, I'm just not thrilled with this type of number. Of course, we have down 19% EPS growth, and yet the street is exuberant because that was somehow higher than what was anticipated. That's why I really needed to do a double take after the quarter. Now, I also want to show you a couple things. You know, FX can't be it, because this is their, you know, it's only down one. About a third of their business is international. So if that's the case, then there's some other way that the business is accounting for FX, that, because let me tell you, everybody else that had a third of their business in another country, they showed an FX differential closer to like 7, 8, 6, 5. You know, it was like all over the map. So this FX blame is just not doing it for me. Yeah. So I just wanted to show you that is the case. And additionally, if we're really talking about a third of your business is international, and Markets with May has been saying, hey, the United States healthy, overseas not so much, you know, then that's not really making me very excited, unless you also have a fairly strong thesis that somehow overseas is going to be using PayPal to sell here. Maybe, but I really need to hear that thesis and the build out associated with it. Now, the last thing I really want to go through that has always bummed me out a little bit, PayPal, is so a lot of people, you know, and I don't want to say a lot of people, but many folks have not yet had an opportunity to really understand what's called the fintech stack. So that's the stack of technology that sits in payment processing, and probably need to do a tutorial on that in general. But when I look, this right here comes from the I think it's the 10Q, no, it's probably the 10K, because I had to review all the documents just to make sure I understood what in the world they were saying. And because, man, what they said sometimes did not match the way that I personally was reading the numbers. I'm not saying there's anything strange going on. But when I look at this stack, what I see is, and I look at the way that they break out their numbers, the thing that really truly annoys me is that they have done a number of acquisitions, and they've gotten the street, they've put out press releases, they've gotten everybody in theory very excited about it. In practice, I don't understand how it helps. Well, and maybe that's just me. Okay. So totally fair enough. Venmo, which by the way, is only possibly in the US because it's not, I mean, and then parts of, there are parts of Europe that it's in, but it's really a primarily US business, right? Is one area of growth, and Braintree, they said on the call, is the other primary area of growth. But if it is, let me see it. Okay. I don't really know another way to say it, because everybody else, if they've got a business that's going to be the future of growth, I get to see that. I don't see any of that clearly in the way that they're representing their numbers. So please, PayPal, if anyone's watching it, we just need better breakouts so we can really understand how it is that you're able to say things like, oh, we're totally going to cut costs, and we've got a number of things that are going to be beneficial for the future. I additionally don't quite understand how Paidly moves into all of this, because I can't see it in your numbers. Paidly is and the subsequent companies that are similar, which are, pay in advance sort of thing, and taking over that business. It does expose this company to the lower credit portion, but I can't see clearly how all of that flows through and how we're going to really make sure that there's not an issue with this piece and what portion of the total business it is. So that's something to note. The other thing that I think is very unclear is, Braintree, I get how that makes money. Venmo, I'm still a little bit, I'd like to see a little bit more breakout and how that actually makes money. And given that I'm not seeing it here, and I barely see it here, I need to actually understand how transaction volume increase is going to help you out. If you could tell me that Venmo magically is going to have better margins, and that what we're seeing here is just a shift from the old business to Venmo as a business, if you could tell me literally anything, I would be a lot better off with you. But thus far, the only thing I can see is that you're saying one thing, your numbers are showing me something else. You're telling me that I have to wait another quarter to really see any kind of cost savings, at least. And also, unfortunately, because you have an activist, I also have to be worried that one of the things that might be happening is half your staff is going to get replaced. And with that, I'll go ahead and hit the stop share. And one last thing I would say is, do you go long? Do you go short? Today, with the entire screen red, it's really hard to say one way or the other. But I would say that if this thing continues, whenever this thing runs over 100, which, I mean, the market's up, the market's down, we shall see. At these valuations, it's really hard to say, because I don't know how much, you still make money. That's great. But you have declining earnings, and you do have revenue growth, but it turns out that to make that revenue, it's more expensive for you. And so it's hard for me to know precisely how to think about valuing you. As a result, this is not my kind of transaction. And I certainly don't think it deserves to trade better until I see a true turnaround. And with that, I'll go ahead and stop the share. Any questions?
Oh, yeah, that's cool. I just want to emphasize your call on NVIDIA. I mean,
know.
Was it last week?
It was right after earnings last week. Yeah.
Yeah,
Yeah.
it traded up to 185, and it's now
Yeah.
132 or something.
I know. I mean, the first 30 points I'll take credit for. The last, like, but who would have known that the US would do something like this and make it even harder for NVIDIA?
Oh, right.
Really,
But
really, I
when you're
mean,
right, the news works in your favor, though.
yeah, no, 100%. And I will say that the way that I had it structured was a little less aggressive. But this morning when I saw the news, I was like, that's a problem. And just to be clear for folks, the reason it's a problem is because they really have a couple of lines of business. And gaming was not doing well. And gaming wasn't doing well primarily because of crypto, but also because gaming has been a little bit weak this last quarter. We're kind of out of the joyous season, which is really holiday period for gaming. And then we've got some tapering down on demand, and we've got reopening. So we've got a number of things that's hurting that business above and beyond the fact that crypto winter is still in full force. But the data business was growing like gangbusters. It was up 60%. And, in fairness, the data business has been strong, period, for every single company that's even remotely involved in it, AMD being the other business. China is a very unique member of the supply chain within semiconductors. And so I'm not 100% sure the implications are straightforward, meaning, yeah, today it's red. And if I was still doing one of many old roles, I would be trying to think about knock-on effects of the fact that NVIDIA is going to be delayed on this data chip that so many companies are betting on for their CapEx. So what are all the ways that this plays out? I think if you are staring in the face of a holiday weekend, you just lower gross, and especially lower gross in NASDAQ. For example, unknown questions that are really, really going to be something that truly good, strong, not your average, not even your below average, which I think there are many right now, analysts. The questions they're going to have to answer for themselves is, given this chip isn't going to make it, which companies are going to benefit because they're going to have delayed CapEx, and which companies are so messed up because they actually really needed that chip in order to grow their business? And what is the mix of how that plays out? Additionally, that chip goes into other things before certain companies can make a sale. So who gets whammied down the supply chain line? Remember, when you affect something that's so far up, so far, I don't know, up or down, I don't know how you think about it, but so far at the beginning of the supply chain, you necessarily create a trickle down the entire economy. Given that that work just needs to be done, a fundamental analyst would have to really have some cojones or just be so on top of their game to come in today. And even if they were to come in today, they would really have to double check with the trading desk and the risk management team, which is probably going to tell you, hey man, can we wait a day and see where it settles? So this is just not, I mean, oh man, that is why this morning I lifted anything that would remotely look long, not just even with NVIDIA, but some of my other tech names that I knew were going to be correlated to it. And yeah, let me pause there. That was a big spew. Hopefully that was helpful. David, are you on mute? David, are you there? I can't hear you.
Here I am. I'm difficult with muting.
It's okay. It's okay. I'm the same way sometimes. We can blame the chips if you want, the semiconductor.
So if you put a multiple on it and say worst case scenario, does it go to what? 80, 90?
Oh man, that's the challenge. I really need, I'm going to need some time to do evaluation work on this, to be fair. And I'm going to have to find, and honestly, I kind of want to see what other people do, because here's the thing, top line growth was in the single digits. So now with this, with 6% down, given that they barely made 6% this last quarter. And also this is going to freak out probably most of the tech companies, period. Some will be aggressive and be like, yeah, we're good, don't worry. But quite a lot will probably be like, whoa, what is going on in regulation, for at least a half a beat. And any kind of delay right now is gonna, given that I'm not seeing, so like Bitcoin is trading down on this. They're not necessarily excited like they're going to get more chips from NVIDIA. So Bitcoin and the related, sorry, I keep saying Bitcoin, but it's really all of crypto and gaming. The fact that it's not excited to get more supply at a cheaper price is telling me that the market is more worried that that you're going to see a even more significant guide down on revenues, which necessarily, you mean, these are still volume businesses. So you're going to have gross margin compression, operating margin compression, So what do you value a company that still has to tell you what's going to guide to? I have no idea, given that the multiple on this is aggressive.
Right. So
I mean, like, until those numbers are coming out on the street,
I'm
and
trying to wrap my head around, they no longer selling a certain type of chip to China. Is that it?
the A100, I think they have to do, let me just look at the actual release just to like be sure, since this news just came out today. Okay, so it has to do, there's two chips that are impacted. There's the license requirement also applies to systems that NVIDIA sells through that incorporate these chips, including its DGX system, or basically its AI supercomputers. So that's the A100X chip. So that you just can't sell it to China. And then the issue is there was a new chip that was supposed to come up.
Okay, can you stop right there? Why did they make that decision?
The US government is concerned that when you sell it to China, it just ends up in Russian military hands.
Oh, okay.
Oh, sorry, H100. So the H100 integrated circuit was supposed to be this new fancy chip, and China was accounting for about, they said on the call, approximately 400 million in potential sales to China, which off of a $5.9 billion guidance is actually kind of significant, 6.8%. I'm just reading.
Do you think it's fact that China is selling to Russia? Where does that come from?
No, I couldn't possibly even conjecture. I'm not sure.
Major move. Must have had some intelligence.
Yeah. What's that?
It's a pretty major move. So they must have had some kind of intelligence.
I couldn't possibly even begin to conjecture. Do you know what I mean? I have no idea how to even think about it. This one I feel like is really like, this is just getting like, you know what I've said about China before. It is a very, very powdered keg situation right now. The risk is still there in the markets in a big way, but at the same time, the United States is going to do what it needs to do to, like, I'm hoping that we're being long-term greedy in the way that we're navigating this, and that we, the plebeians, can't see it.
Could we be wanting to keep the chips here? I mean, I'm trying, but there's not enough demand here. Okay.
I mean, there is. Look, this is a really great chip. So the hyperscalers will probably soak that volume up potentially, but realize that most of the hyperscalers are already spending a number on CapEx that's pretty high. I think the real question that I don't think it's, so yes, this is bad, but I think the reason why, if you're at a fund, my suspicion is that whenever things like this happen, your next immediate question is, what's the knock-on effect? Because it's so far up the supply chain. So is the knock-on effect that a bunch of different items that employ this AI are delayed as well? And then who is impacted, and what is the potential ripple effect? And I think that that's a little bit advanced for me. Let me just go ahead and admit that. So I kind of need just time, and I wouldn't mind hearing what a couple other talking heads have to say about it to make a call on where I fall out.
Okay, thank you. Devon Energy, they declare dividend or ex-dividend. They go ex-dividend September 9th.
I know.
But these oil companies like Devon, like EOG, they make plenty of money even if oil's at $85.
Yeah, so it's really what's going to happen in the fourth quarter. The thing is, I think that if you're buying Devon, I would prefer you not use the options market if you can help it, and just buy it maybe after the dividend. Because buy it either before the dividend, sell it right away, or just hold it through, because I do think there will be another dividend on the other side. But I do think, like, this market is going to be just so choppy. It's going to be because now we kind of know that US-China relations, which seem to be improving and then getting worse and then improving and then getting worse. This also concerns me for just generally speaking, US-China relations.
Yeah, I mean, overall markets, you know how bearish we have been. So, but today hit very, very big support. So, and I mean, we'll sell a rally, but a pretty big one.
Yeah, I think
Bounce pretty hard.
yeah. And like I've said before, and I definitely need to do a video on it, if the institutional investor decides to take it down gross, which means to reduce, just to go to cash, essentially. If they have assets in long short, they will always typically have more long assets over across the entire industry. So we will always look like a bear market sell-off. Always. At this point in history.
What you're saying, mutual funds, which is retail, are always buyers.
No, yes, and
Well,
also even the hedge fund world typically is still going to be like, they might do 130-30. So they're like 100% long, 30 short. So they're 130-30, 130 gross, 100% long, 30% short. And if they decide to reduce gross to be 80% long and a bit more short, it's going to look like a bear market. So the reduction of gross will always look like a bear market, because you have both the sell-off of positions that were winners or, just getting rid of positions. And then you have any shorting that's happening to reduce, to further reduce, or you just have people getting out of shorts and longs at the same time, which will still look like a bear market sell-off because of just the way in which most of these funds are structured. Very few funds go greater than 100% short at any given time.
The 10 years jumped to 3.25, which is another reason we think that's on the high side in this environment. So that'd be another, if rates go up, multiples come down, that's another ingredient of a bear market. But
yeah,
we think 3.25 is kind of high near term.
Yeah, I mean, first day, this is really, really, really painful timing, because the first day, it's really painful timing because, we do have a holiday weekend. It's just really painful timing,
Yeah, I'll see what you mean.
like if this notice had happened next week, it'd be easier to navigate, but you're really not leaving most investors any kind of, you're not leaving a whole lot of options for them to do what they need to do.
Yeah, they'll wait till after the holidays, what you're saying.
Yeah.
Okay, that makes sense. Okay, thank you, May.
All right. Good luck, guys.